The government is finally stepping in to help us out with this high cost of buying a home. You already know buying a house right now is very expensive. Home prices have gone up, interest rates have gone up, which is a bad combination. According to this Yahoo Finance article, the government plans to reduce the cost of buying a home by attacking junk fees in closing costs. Your closing cost is usually an aggregate of several fees you've incurred throughout the loan process. It usually has an origination fee, which is a percentage of the total loan amount that your lender is charging you for processing the loan. It would have your appraisal fee, your title insurance fee, your credit report fee, and some other fees. These other fees is what the government is attacking because closing costs has had its largest increase since 2018. It went up by almost $1,000 to an average of $6,000. I'm calling it $6,000. Even for refinance, closing costs has had a 41% increase to an average of $5,000. This other fees is what the government believes is padded with junk fees. And by the government, to be specific, is the Consumer Financial Protection Bureau. CFPB, we're just going to call it the C because it's hard to say that word over and over. CFPB, say it 5 times. The C specifically called out discount points and title insurance as possible areas of unfair and excessive charges. Discount points are fees you pay to reduce your interest rate and it's just by a little bit, maybe a 0.25%, 0.5%, or a full percent. It's the fee the lender charges you to reduce that interest rate. 59% of mortgage borrowers paid discount points last year. That's up from 31% in 2021 and 54% in 2022. Well, that's understandable. Mortgage rates have gone up. So what's the problem? Why is this considered junk fees? Well, if it only shaves off a few dollars from your mortgage payment, your monthly mortgage payment, is it really worth it? And you would have to stay in the house long enough for it to actually be worth what you paid for it. For instance, you are getting a mortgage at 3.5%, and it would cost you $2,500, $2,500 to bring that rate down to 3.25%, so a 0.25% lower. That decrease brings down your mortgage payment by $35. So let's just say you would have been paying $1,035 every month, but now that you've paid for that lower interest rate of 3.25%, your mortgage payment is now going to be $1,000 flat. So you're saving $35 every single month. Well, you paid $2,500 to get that savings of $35 every month. You would have to make 72 payments for you to break even. You would have to stay in the house longer than 72 payments for it to be worth that $2,500 you've paid. 72 payments is 6 years. If you sell that house before 6 years or refinance before 6 years, that $2,500 is a waste. The other thing is $35, is it really worth paying an additional $2,500? Because remember, this $2,500 is in addition to all the other fees you have to pay that is in the closing costs, the origination fee, the appraisal fee, the insurance fee. This is an additional, the down payment, that's a big kahuna. This is an additional $25. So when you see it only makes a difference of $35, is it really worth that? Wouldn't you rather pocket that money, especially now that interest rate is high and we are praying for it to go down so we can refinance down the road? If you refinance before the 72 months is up, you've just thrown money away. You might as well just be paying that $35 for the 5 years before you refinance. But the argument is it really a junk fee if the borrower, you and I, know what we're getting into? Can we consider this a junk fee? Whether or not it benefits you, whether or not you plan on selling after 5 years or before 5 years, if it's been disclosed to you from the get-go, which is what the law requires that the lenders do, then can it be considered junk fee? My question though is it, if we're not educated on it? Because when you're buying your house, unless maybe your realtor educates you on it or someone educates you on it, or it's not your first time buying a house, for those of us who are going about it the second time, you may not know this, and you're not going to spend time, doing this math. You're just going by what they tell you. Oh yes, lower interest rate. So that's the argument. Can we consider this a junk fee? Hopefully you watching this video gives you, an edge, because now it may not be worth it, especially depending on your plans for the house, how long you'll be staying in the house, how much is it really saving you every single month. So for that alone, you should be giving me the thumbs up. According to this article, apart from the discount fees, there's also the illegal convenience fees. And since Loveth is buying a house this year, I was paying attention. What? In Glover and Booz versus Alquin Loan Servicing LLC, Two borrowers sued over convenience fees their mortgage company charged for making payments online or by phone. Fees from $7.50 to $12 on several occasions. These are fees the borrowers didn't agree to when they took out the loan. And I'm thinking, this is really not a big deal. $7, $12 is really not a big deal. But honestly, I'm all for I do not want to pay more than I have to, especially if it's for in 2024, I'm being charged for making a payment via phone online. You expect me to drop a check? Uh-uh. Now that matters. And I'm now thinking, where else? Where else are all these junk fees and inconvenience fees? And I know that's what you're thinking. Well, to find the junk fees, you check Section A of your loan estimate. This is where lenders place fees that you can't shop for. Fees like underwriting fee, processing fees. These are fees that they as a lender charge for their service. It's not one of the, this is what they've decided. If you're going with us, this is what we charge to underwrite this loan. This is what we charge to process this loan. So take a look at that. That section would also have extra fees. And if you don't understand any of those fees, you go ahead and ask. Ask what it is. Ask them to break it down to you like a 2-year-old. And you can shop around and see what other lenders will charge you to process your loan, will charge you to go with them. As someone buying a house this year, I was all in. I was paying attention to every line of this article. And I told myself, well, we'll check every single fee on that section A. But then I read the last paragraph, and the last paragraph kind of confirmed to me what I was thinking at the back of my head. The last paragraph said, if the government attempted to limit those fees, discount points, title insurance, any of these other fees, the lender would increase the interest rates to make more money from the revenue center of the loan. The money is coming from somewhere. To be honest, though, I'm all for the government doing whatever they need to do to bring down the cost of buying a house. There are things we can't control. Yes, the lender will find other ways to make their money. I understand, and we can't control that. But I'm all for the government doing whatever is absolutely necessary to bring down this cost of buying a house. And they should hurry up and get it done this year before I have to close on my house and pay closing costs. Just keeping you informed if you're a fellow home buyer in 2024. Who knows what it will be in 2025? Just keeping you informed. And the more information I get, I will share it with you. I will link that article in the description below so you can, read it for yourself. Are you in this with me? Are you one of us who have to buy a home? Let me know in the comment section. Let's hold hands together and kumbaya and sing through the pain of the down payment. Thank you so much for watching. I will see you in the next video. Bye. CFPB. CFP, I can't. CFP, say that 5 times. CFPB.